Hello, and welcome to another episode of Decentralounge, which is brought to you by GlobalStake, your institutional, truly decentralized, because we're self-owned and managed, bare metal staking service provider, and we're also SOC 2 compliant. But today, I'm excited. We have a distinguished guest on the show, Emanuele Rossi, who is the head of sales and expansion for Mountain Protocol. Mountain Protocol is a groundbreaking financial platform, by the way, that issues USDM. So this is the first permissionless regulated yield-bearing stablecoin. So operating on Ethereum and a bunch of other blockchains, it offers a robust system for users to benefit from stable assets with potential growth through yields. The platform also focuses on transparent, regulated, and secure financial interactions, making it an enterprise-grade solution for developers, but importantly, investors alike. So today we're going to dive a little bit deeper into what Mountain Protocol is and have Emanuele give us kind of like a high-level overview and maybe answer some deeper questions. But to kind of just kick things off from the very beginning, can you just share with us what got you into crypto, Emanuele? Like, what was the actual pivotal moment in your life that said, this is cool, I want to be a part of this industry?
Yeah, thanks a lot, Jordan, and it's glad to be in touch. For those that don't know, we shared some good experiences in the trenches at Coinbase back in the days, and it's good to see you doing so well and at GlobalStake. And it's awesome to be here. Maybe a quick intro about myself, Emanuele. Again, I lead sales at Mountain Protocol. Started my career in TradFi/tech, moved to Coinbase, prime brokerage, institutional sales, tokenization, and just joined at the beginning of this year or in June of this year as Mountain Protocol. Again, we're the issuer of a stablecoin, USDM, yield-bearing, pretty straightforward product, and we can talk about it a little bit more later. In terms of my personal background, how I got into crypto, I've always been a hobbyist, investors, passionate about the space, and in 2016, started putting some money on the table, buying some Bitcoin, some Ethereum, learning about the technology. And during the bull market of the last cycle, at least at the beginning of that bull market, I was sitting on the saddle and I was telling myself, okay, this is getting too interesting. I need to do something, put my skin in the game. And I was working at Bloomberg back in the days. I remember writing to the HR team, hey guys, I would like to get paid in Bitcoin. Can we do this? And they told me, we cannot pay you in Bitcoin and we're not going to do it anytime soon. So I was like, okay, this is the exit sign. It's time to look for another job that is going to let me, pursue this passion full time. And sure enough, I sent some applications on LinkedIn and ended up getting this job at Coinbase that I was mentioning earlier, and was part of the prime brokerage business, working with Jordan and many other talented folks to build that franchise. It was an incredible experience, but on to greener pastures now at Mountain Protocol. So that's a little bit about my journey.
No, I absolutely love it. So you covered a ton when you were at Coinbase Institutional. So can you kind of allude to the story of what was it that you were seeing in the landscape of all the various different customers that you covered at Coinbase that made you say, hey, I'm really interested in what Mountain Protocol is doing. I want to be a part of this mission. So I guess the question's twofold. What was it that led you to be interested in joining a stablecoin? And then what specifically is Mountain Protocol? Like, why was it founded? What's its main purpose?
Sure. So at Coinbase, within the institutional business, I had a pretty large remit. I was covering all different type of clients, whether it was crypto hedge funds, VCs, asset managers, and so on. Ended up doing a lot of work around payments and tokenization. And these are key use cases for stablecoins specifically. On the tokenization front, I ended up basically starting the business of Coinbase, the tokenization business of Coinbase, with a couple other colleagues, which we call the on-chain solutions. Through that process, we were working with all different RWA issuers, tokenization providers, whether they were TradFi or crypto-native tokenization players. And stablecoins were, of course, a big part of the tokenization equation, if you think about stablecoins and tokenized dollars, effectively. So, after thinking about what I like to do and what I liked about crypto, I realized that I was very attracted to real world adoption and utility of the technology of blockchains and, crypto more broadly. And so I told myself, okay, where there is real world adoption, where is the utility in crypto? Stablecoins were the real answer from a product market fit perspective, how people are using them for day-to-day transactions to save their money all over the world. And so I told myself, okay, what is the best stablecoin? Coinbase, of course, has a great relationship with Circle, so I had the chance to go in the weeds about USDC and the landscape back then, but those are, let's say, the first generation stablecoin. So what is next? I was very lucky that I was working basically with all of them through this tokenization team. So I did my little analysis of the market, of the founders, of the companies that were playing in the space, and ended up choosing Mountain Protocol. I literally told Martin, the CEO, hey man, can I join the team? I really love what you guys are doing. And sure enough, we negotiated, discussed it for a bunch, and we made it happen. Why did we decide to launch USDM and this specific product? Well, it's not a secret at this point in time, but the modeling and way in which stablecoins make money nowadays, at least through the traditional structure, is by pocketing the interest that is generated by the underlying reserves, by the underlying collateral. In most established stablecoin use cases, this collateral is treasuries of the United States government. And of course, with rates going high over the last few years with inflations and so forth, these have become very profitable businesses for the stablecoin issuers. One example could be Tether, that notoriously has 60 to 100 employees. I'm not 100% sure, and they are an extremely profitable business making billions of dollars in revenue. So this situation started to turn a lot of heads, and specifically for us, for our CEO, for our team, we thought, okay, we have high yield checking accounts, high yield savings account in traditional finance. It's impossible that there is not an equivalent product for cryptocurrencies, for the crypto industry. So that's the idea. Together with the idea, of course, there is the concept of taking that interest, those T-bills that are sitting as collateral, and not only pocketing all of that revenue ourselves, but also giving it back and sharing it with the community as well, so that they can, do whatever they wish to do with it, whether it's invest in their projects, whether it's save a few dollars, whether it's optimizing some of their trading efficiencies, their trading operations. Ultimately, this is just a more productive dollar versus something like a traditional stablecoin model. And the idea for us is to really, reward the ecosystem, put more money in the pockets of anyone in the world, whether they are a sophisticated institution or, the average person that is just looking to save a few dollars without having to worry about getting rugged by some weird smart contract or some weird counterpart. So that's how I got into Mountain Protocol, into USDM. That's the idea behind our product, and it's very exciting. We work with literally anyone that touches a stablecoin nowadays. I would say that this could be decentralized finance protocols, DEXs, lending protocols, and so on. It could be centralized CeFi type of players, whether it's exchanges, traders, investors, prime brokers, custodians, and then we do a lot around real world use cases, for example, consumer apps, fintech applications, neobanks, and so on. So really working with anyone in crypto, anyone that touches a stablecoin, to give them a more productive dollar.
Fascinating, absolutely fascinating. So I'm curious, the audience that typically listen to this podcast, for instance, are hedge funds, family offices, and kind of venture capital funds. And I would probably say 60% of the people that listen are crypto native, 40% are not. So the question I have for you is really, and we'll dive into some other benefits about what you guys are doing, but how do people get access to this? Is this a product that is being offered right now to retail users? Is this only directly for institutions? Do they have to go directly to you? Or are you all partnering with, to your point, like you said earlier, exchanges and custodians directly? Because I think one of the first questions somebody who's not deep in the weeds might ask is, okay, well, what's the difference between like BitGo's launching a stable coin, or to your point, Coinbase has USDC? Like, are you guys also going to be on these other platforms, or do we need to go directly to you?
Yeah, so from a market access standpoint, there is a few different ways in which investors can get their hands on USDM. There is a primary market, which is essentially an account which the stablecoin issuer that can be used to mint and burn the stablecoin. That is the place where most sophisticated institutional partners access this type of products. And then on the secondary market, it's everything else. It's DeFi, venues, DEXs, and so forth. It's OTC desks, it's whatever it may be, exchanges, and so on. So there is different ways in which different counterparts can access the product, but for the sophisticated institutions, the primary market is really the key access point. This is the most effective one. In terms of how something like USDM would differ versus against a USDC or the Bitcoin stablecoin and so forth, the reality is that all of those products have some degree of middleman rev sharing in place, meaning that instead of really democratizing access to the interest and to the yield, to the rewards across any holders, there is always some middleman sitting in the relationship that decides who gets what, how much is being distributed to who, and so forth. An example is Coinbase with Circle. Of course, Circle is the issuer. They generate interest through the reserves, and then they allow Coinbase to create rewards programs through their interest and to basically incentivize adoption of USDC through that rev share agreement. The same applies for many other models that are coming to market. Our model is unique in the sense that there is no middleman. The smart contract is really who distributes these rewards to any holder of USDM. And it doesn't matter who the holder is. We always make the example and the situation that, it doesn't matter to us if you're a sophisticated trader holding a USDM in a Fireblocks wallet, or whether you are, a farmer in the middle of nowhere with a MetaMask wallet. To us, it doesn't matter. To the smart contract, it doesn't matter. Regardless of where the assets are sitting or who you are, you're always going to get access to those daily USDM rewards that are going to be distributed directly in your wallet without any, middleman having to say, okay, this person gets X, this person gets Z. It doesn't work like that. For us, the smart contract is managing this process automatically on a daily basis. At this point in time, that's how the structure of the product is. The elegance and the simplicity, it's really what makes it a powerful construct that can serve anyone across the crypto ecosystem, and more as more and more financial infrastructure gets built on stablecoin rails.
I love it. Highly needed. And I completely agree with the point you made about 10 minutes ago that real world asset adoption, the largest real use case today is stablecoins. So out of curiosity, when it comes to the actual market adoption with regulatory challenges, is this something that is only for US based customers, or are you guys offering this on a global scale? Are there any jurisdictions that you have to avoid?
Yeah, so currently through the primary market, we do not serve US customers or US entities specifically, and other restricted jurisdictions. Other than that, we can basically face and interact a large number of entities. We are a regulated financial institution out of Bermuda, and through this framework, we can serve customers all over the world, essentially, outside of the United States. On the secondary market side, the asset is permissionless, meaning that you can just go on DeFi markets, on an exchange, and acquire it simply as you would acquire any other products that you acquire nowadays in crypto. So if you want to go on a DEX, you want to go on a lending protocol, you want to use the product for any type of trading activity, it can be done on a permissionless manner through the secondary market. And this concept of a permission primary market and a permissionless secondary market is, again, nothing new. It's something that has been pioneered by the Tether or the Circles of the world, where to have an access to mint and burn stablecoins directly, you need to work with the issuer, KYB with the issuers, on board with them. And then once you're onboarded, you can again mint, burn, distribute the product across the secondary market in a permissionless fashion.
Awesome. Good. Glad we got that out of the way to make sure people are aware. Make sure your papered entity is outside the US. Next question I have for you, Emanuele, would be like white labeling the solution. So if a fintech is coming to you and saying, hey, we're looking to have some type of a stable coin, either whether it's our own or we want to interact with an existing one already, are you guys essentially saying everybody's using USDM? We're building this ecosystem. Let's all stay together and keep it simple. Or are you offering the ability of like a fungible stable coin that does the same thing? That could be some fintech's stable coin that they're offering, and you guys are the back end rails.
Yeah, it really depends, and we've built for both use cases. We are experimenting with companies doing both things. We have companies that power, for example, saving solutions or dollar savings accounts using USDM as is without any type of white labeling, and people just deposit their USDT or USDT into vaults. Those vaults basically depositing USDM, and then the holders, the investors, are able to capture those daily rewards. So that would be the standard USDM integration for this type of use cases. On the white label side, a company could easily create again some sort of structure or some sort of internal process where they collect USDM. This USDM is then, rebranded publicly as USDX, let's say, and that becomes their white label stablecoin that has all of the properties of something like Mountain Protocol. It's powered by Mountain Protocol, but again, as the brand and keeps the brand of that company. So we've done both exercises. We're able to support both use cases. There is a lot of ways in which you can bring these couple use cases to market. It really depends on the preference of a company and the type of build that you want to put in place.
Are there any exciting partnerships or collaborations that you guys are able to share?
Yeah, absolutely. So one of the latest one, most recent one, is a partnership with a company called Eldorado. Eldorado, going back to real world use cases, is the biggest peer-to-peer stablecoin market in LATAM. They have 300 to 400,000 clients who essentially acquire stablecoins through their marketplace in a peer-to-peer fashion. They can also use this Eldorado app to pay in stores. Let's say that you want to buy a coffee instead of having to pay with an inflating currency. You can now use a stablecoin like USDT. You can use it as a pay, and the merchant can also accept it as their payment method. And what we are doing with Eldorado is we are powering again a saving solution. So just referencing what I was mentioning a few moments ago, users, customers of Eldorado, they might be saving in USDT, let's say, on top of saving in a dollar. Now they also can save in a dollar that pays them rewards. And specifically, they get paid the risk-free rate of the United States government, essentially, or as close to it as possible. So we are powering the saving functionality for this company, Eldorado, and effectively allowing 300,000 to 400,000 people all over LATAM to not only have access to a dollar, but to also be able to save in dollar terms. So a very powerful integration, a very powerful partnership. I'm personally very excited about it. As we talked earlier, real world use cases, real world adoption are one of the things that drove me to stablecoins, and being able to bring to market such an integration is very exciting, and being able to change the life of many people all over the world is also exciting. We are working, of course, on a lot of things on the crypto native side, which is equally exciting. We have integrations on the DeFi front with large protocols like Curve. We recently launched a few lending pools with Morpho, a blue chip lending protocol, and we have some exciting launches coming up on Compound and more. So really making sure that the asset is deeply available for crypto players to leverage it, again, to get access to this more productive dollar across their operations. And then CeFi, it's a whole other story. Lots going on with exchanges, lots of conversations with traders in the space, but I think we'll need a little bit more longer to discuss that.
For sure. So then out of curiosity, if it's not something you can talk about just yet, but for the future of Mountain Protocol, are you guys looking to potentially add any additional products that might be a little bit more aggressive? So from my understanding today, USDM, the yield is powered predominantly by US Treasuries. But do you see a future where Mountain Protocol has another stable coin that's maybe powered by yield that's coming from DeFi and some of these wild use cases where people are earning 20, 30, 40% yields within the ecosystem itself?
Yeah, that's a great question. The short answer is no, and I'll give you the reason why that is the case. So first of all, we are ultra focused on USDM and the dollar stablecoin market. The dollar is, of course, the reserve currency of the world, and people want to have access to the dollar, whether they are, again, in America or whether they are less fortunate jurisdictions. That's the type of asset that people want to save in. And that's really the asset that has been the most adopted for crypto-related transactions. So we're ultra focused on dollars. Now, will we launch other stablecoins at some point in time? Maybe, but that's a conversation for another day. We need to see what happens with demand for those type of local currencies and local stablecoin. Right now, it's really all about the dollar. It's a big enough market. It's a in-demand market, and we're really focused here. We're not planning to launch a governance token. There is no need for us to have a governance token. So that's another thing that we're happy about. We don't need to deal with those dynamics. We see ourselves as a financial services company, not really as a crypto company. Many of our customers are crypto companies and it's the crypto ecosystem, but we see ourselves really as a financial institution. We are a regulated financial institution, and it's very tricky to bring to market risky products when you're a financial institution. Mountain Protocol is prudentially regulated, and that high level means that the products that we design and that we bring to market are meant to be used by the masses, and the people, the institutions that use these products don't need to really understand the risks or think about losing their money when they're using something like USDM. Our product is fungible to a tokenized deposit, to a dollar, and the person that is holding on to a dollar is not expecting this dollar to blow up from one day to the other. He's expecting the value of the asset to be stable. He's expecting to be able to save in this asset, and that's the type of utility that we're bringing to the market. There is certainly lots of interesting products, experimentation that is coming in place thanks to crypto, thanks to smart contracts, and it's super exciting to follow along. But what we are really focused on is bringing the safest, most useful asset in crypto to the market. That's really it. We're never gonna bring double-digit returns, triple-digit returns to our clients, to the ecosystem. Hopefully we don't have to, unless inflation goes up to that much. But that's really it. Safety, prudential regulation, being a useful product that anyone can use.
That makes complete sense, which alludes my next question of transparency. So a lot of people that have been paying attention to stablecoins for years now are very speculative when it comes to Tether's actual ability to produce reports that are trustworthy. So how transparent is Mountain Protocol in regards to the actual reserves they have for the stablecoin?
Yeah, as I mentioned, we are a regulated financial institution, and to get the licenses that we have to operate in the jurisdiction where we operate, there is extensive oversight around what we do, around our financial standing, around our operations, and so forth. So all of this to say, we have public monthly attestations that we have available on our websites that anyone can go in and see. They can look at our portfolio at the ISIN level, meaning the individual treasuries that we are holding. They can see what they are. We hold some tokenized money market funds. Those are also available on our investment mandate page on our website, as well as on our monthly attestations. So all is public, and this comes with being a regulated institution and with being able to handle the scrutiny and the oversight that comes from our financial regulators. So that's the short answer there.
Awesome. Makes sense. And then which ecosystems are you guys currently live on, and are there any you're looking to go into? So like Ethereum is an obvious one, but what about Solana or Sui or really any of these other up and coming very large layer ones?
Yeah, so we are live on Ethereum, Base, Optimism, Polygon, Arbitrum. We're going to be live on ZK Sync soon enough, and we are planning to launch on a bunch of other networks. And this means Solana, it means a bunch of the other EVM chains. All of these are in the pipeline for us. We want to be where other stablecoin providers are, so that again we can put a more productive dollar in the hand of the customers of these various ecosystems, regardless of what they're doing, whether it's saving or it's transacting on a DeFi market or whatever else. So we have lots in the pipeline. The way in which we integrate with these networks varies depending on what the networks they're looking to achieve. But again, we are an issuer. We can work with anyone that wants to work with us in the end.
Awesome. Love it. Well, for those of you that are listening, what is the best way that they can reach out to you, Emanuele, whether that's just to connect with you or to learn more specifically about Mountain Protocol?
Yeah, sure. So definitely follow us on social media, on LinkedIn and Twitter. On LinkedIn, we are Mountain Protocol. On Twitter, we are at Mountain USDM. You can also connect with me on LinkedIn, follow me on Twitter. My DMs are open on both the websites. I love connecting with the people in the space, talking crypto, talking business. So always happy to chat and to learn more about what you guys are doing and if there are ways in which we might be able to work together. And yeah, always happy to chat and see what can be done together, how we can push the industry forward.
Awesome, fantastic. And for those of you that are listening, all of those links are going to be linked specifically on whatever platform you're tuning into for this podcast. But Emanuele, appreciate your time today. Love to see the continued success from you, from Coinbase all to where you are now with Mountain Protocol, heading up global strategy and expansion. We're excited to see what Mountain Protocol and you guys continue to do. And thank you for coming on the podcast today. For those of you that are listening, we'll catch you all next time on another episode of Decentral Lounge. See you guys.
Thank you, Jordan.